Unlocking Bitcoin for pros. Is the IBIT ETF the key? Hey investors! Are you intrigued by Bitcoin's potential, but hesitant about direct ownership? The iShares Bitcoin Trust, IBIT, ETF might be the answer. In this video, we'll delve deep into IBIT, exploring its unique structure, its role in professional portfolios, and whether it truly provides sufficient diversification. We'll compare it to other options, discuss its advantages and drawbacks, and help you decide if IBIT aligns with your investment goals. Buckle up, and let's explore the exciting world of Bitcoin through the lens of IBIT. Question 1. Why was the IBIT ETF created, and what specific market need does it aim to address? The iShares Bitcoin Trust, IBIT, ETF was created to address several market needs related to Bitcoin investment. 1. Increased accessibility. IBIT offers a regulated and accessible way for investors to gain exposure to Bitcoin, without directly purchasing and storing the cryptocurrency themselves. This eliminates the technical hurdles and security risks associated with individual Bitcoin ownership. 2. Institutional investment. IBIT was specifically designed to cater to institutional investors who were hesitant to enter the Bitcoin market due to regulatory uncertainty and concerns about operational complexity. The ETF structure provides a familiar and transparent investment vehicle for these institutions. 3. Diversification. IBIT can be used by investors to diversify their portfolios and gain exposure to the potential returns of Bitcoin alongside traditional assets. This can improve portfolio risk-adjusted returns, especially considering Bitcoin's historical low correlation with other asset classes. 4. Reduced volatility. While Bitcoin is known for its high volatility, IBIT offers a potentially less volatile alternative due to its underlying structure and professional management. The ETF tracks a basket of Bitcoin futures contracts, which can smooth out some of the price fluctuations inherent in the spot market. However, it's important to remember that IBIT still carries several risks associated with Bitcoin itself, such as price volatility, regulatory uncertainty, and potential security risks at the custodian level. Investors should carefully consider these risks before investing in IBIT. Overall, the creation of IBIT aimed to fill a gap in the market by providing a regulated, accessible, and institutional-grade way for investors to gain exposure to Bitcoin and its potential returns. It addressed the needs of individual and institutional investors seeking diversification and reduced volatility while acknowledging the inherent risks of the underlying asset. Question 2. Why should professional investors consider the IBIT ETF as part of their investment strategy? Here are some reasons why professional investors might consider the IBIT ETF as part of their investment strategy. 1. Increased accessibility to Bitcoin. IBIT offers a convenient and regulated way to gain exposure to Bitcoin, a highly sought-after yet complex asset class. This eliminates the need for direct ownership and its associated technical hurdles and security risks. 2. Potential portfolio diversification. Bitcoin has historically exhibited low correlation with traditional assets, offering diversification benefits. Including IBIT in a portfolio can potentially improve risk-adjusted returns, especially for investors with longer time horizons. 3. Reduced volatility. Compared to directly owning Bitcoin, IBIT offers potentially lower volatility due to its structure. By tracking a basket of Bitcoin futures contracts, The ETF smooths out some of the price fluctuations inherent in the spot market. 4. Potential for high returns. Despite the volatility, Bitcoin has delivered significant returns over the long term. While past performance is not indicative of future results, IBIT could offer access to these potential returns for investors with a high risk tolerance. 5. Institutional-grade investment vehicle. IBIT is designed specifically for institutional investors, addressing their concerns about regulatory uncertainty and operational complexity associated with direct Bitcoin ownership. The ETF structure provides a familiar and transparent investment vehicle. 6. Potential hedge against inflation. Some believe Bitcoin could act as a hedge against inflation due to its limited supply and decentralized nature. While this is still debated, IBIT could offer exposure to this potential benefit. 7. Access to a growing market. The Bitcoin market is rapidly maturing and attracting increasing institutional interest. IBIT provides an easy way to participate in this potential growth story. However, it's crucial to remember that IBIT also carries inherent risks. 1. Bitcoin's price volatility. Despite its lower volatility compared to spot Bitcoin, IBIT's price can still fluctuate significantly. Investors should be prepared for potential losses. 2. Regulatory uncertainty. The regulatory landscape surrounding Bitcoin is still evolving, and potential changes could impact the ETF's operations or value. 3. Security risks. While IBIT employs professional custodians, there's still a risk of hacks or other security breaches affecting the underlying Bitcoin holdings. 4. Limited historical data. IBIT is a relatively new product, and its long-term performance characteristics are still unknown. Investors should carefully consider its short history before investing. Question 3. Why does the IBIT ETF focus on the particular sectors or asset classes it does? The IBIT ETF actually doesn't focus on any specific sectors or asset classes. As its name implies, the iShares Bitcoin Trust, IBIT, invests primarily in one asset, Bitcoin. It doesn't hold a variety of companies or other investments across different sectors. Therefore, the question of why it focuses on specific sectors or asset classes doesn't apply to IBIT. Rather, its purpose is to provide investors with exposure to the price performance of Bitcoin without needing to directly purchase and store the cryptocurrency themselves. Here are some key points about IBIT's specific investment strategy. 1. Investment target. IBIT aims to track the price of Bitcoin futures contracts traded on regulated exchanges like the Chicago Mercantile Exchange, CME. 2. Portfolio composition. The ETF doesn't hold actual Bitcoin, but rather a basket of these futures contracts, with the specific composition constantly adjusted to maintain consistent exposure to the desired target price. 3. Sector asset class neutrality. By solely focusing on Bitcoin futures, IBIT doesn't offer exposure to any specific economic sector or asset class beyond the cryptocurrency itself. So, IBIT stands out as a unique investment vehicle, not for its diversification across sectors, but for its singular focus on providing regulated and accessible exposure to the price movements of Bitcoin. Question 4. Why does the issuer believe the investment strategy of the IBIT ETF is suitable for professional investors? While the IBIT ETF doesn't offer exposure to diverse sectors or asset classes, the issuer BlackRock, believes its investment strategy can be suitable for professional investors for several reasons. 1. Increased accessibility and convenience. Professional investors often manage large portfolios and may find direct ownership of Bitcoin inconvenient due to technical hurdles and security concerns. IBIT provides a familiar and regulated ETF structure, simplifying access and management. 2. Diversification potential. Although IBIT doesn't diversify across sectors, it can still contribute to portfolio diversification due to Bitcoin's historically low correlation with traditional assets. This can potentially improve risk-adjusted returns, especially for long-term investors. 3. Reduced volatility. Compared to directly owning Bitcoin, IBIT offers potentially lower volatility by tracking a basket of Bitcoin futures contracts. This can be attractive for professional investors managing risk within client portfolios. 4. Institutional-grade investment vehicle. IBIT is designed specifically for institutional investors with rigorous compliance and operational standards. This provides a familiar and transparent way to access Bitcoin with the security and professionalism they expect. 5. Potential for high returns. Despite the volatility, Bitcoin has delivered significant returns historically. While past performance is not indicative of future results, IBIT could offer access to these potential returns for high-risk tolerance investors. 6. Exposure to a growing market. The Bitcoin market is maturing and attracting increasing institutional interest. IBIT provides an easy way to participate in this potential growth story, which could be attractive to forward-thinking investors. 7. Potential hedge against inflation. Some believe Bitcoin could act as a hedge against inflation due to its limited supply and decentralized nature. While debated, IBIT could offer exposure to this potential benefit, relevant to portfolio construction considerations. 8. However, BlackRock also acknowledges the inherent risks associated with IBIT. 9. Bitcoin's price volatility. Despite offering lower volatility than spot Bitcoin, IBIT's price can still fluctuate significantly, requiring investors to be prepared for potential losses. 10. Regulatory uncertainty. The regulatory landscape surrounding Bitcoin is evolving, and potential changes could impact the ETF's operations or value. Investors should consider this evolving landscape. 11. Security risks. While IBIT employs professional custodians, there's still a risk of hacks or other security breaches affecting the underlying Bitcoin holdings. Investors should assess the ETF's security measures. 12. Limited historical data. IBIT is a relatively new product, and its long-term performance characteristics are still unknown. Investors should carefully consider its short history before investing. Question 5. Why should the IBIT ETF be included in a broader portfolio, and what role would it play? Including the IBIT ETF in a broader portfolio can be a strategic decision with potential benefits and drawbacks, depending on your overall investment goals and risk tolerance. Here's a breakdown of the potential role IBIT could play. Potential benefits. 1. Diversification. Bitcoin has historically exhibited low correlation with traditional assets like stocks and bonds. This means that adding IBIT to your portfolio could potentially help reduce overall volatility and improve risk-adjusted returns, especially during periods of market downturns. 2. Potential for high returns. Despite its volatility, Bitcoin has delivered significant returns over the long term. While past performance is not indicative of future results, IBIT could offer exposure to these potential returns for investors with a high risk tolerance. 3. Inflation hedge. Some believe Bitcoin's limited supply and decentralized nature could make it a hedge against inflation. While this is still debated, IBIT could offer exposure to this potential benefit. 4. Exposure to a growing market. The Bitcoin market is rapidly maturing and attracting increasing institutional interest. IBIT provides an easy way to participate in this potential growth story. Potential drawbacks here. 1. High volatility. Bitcoin's price is known for its significant fluctuations, and IBIT, while potentially less volatile than direct Bitcoin ownership, still carries this risk. Investors should be prepared for potential losses. 2. Regulatory uncertainty. The regulatory landscape surrounding Bitcoin is still evolving, and potential changes could impact the ETF's operations or value. 3. Security risks. While IBIT employs professional custodians, there's still a risk of hacks or other security breaches affecting the underlying Bitcoin holdings. 4. Limited historical data. IBIT is a relatively new product, and its long-term performance characteristics are still unknown. Investors should carefully consider its short history before investing. Overall role. If you have a high risk tolerance and are looking to diversify your portfolio with an asset that has the potential for high returns, IBIT could be a suitable option. However, it's crucial to understand the inherent risks involved and ensure it aligns with your overall investment strategy. Remember, IBIT shouldn't be a significant portion of your portfolio due to its volatility, and it's essential to conduct thorough due diligence before making any investment decisions. Additional considerations. 1. Investment time horizon. If you have a long-term investment horizon, you may be better able to weather Bitcoin's volatility and potentially benefit from its long-term growth potential. 2. Risk tolerance. Carefully assess your risk tolerance before investing in IBIT. If you are risk-averse, this ETF might not be suitable for you. 3. Portfolio allocation. Limit the allocation of IBIT to a small percentage of your overall portfolio to manage its impact on your portfolio's volatility. Question 6. Why might the issuer offer multiple share classes or investment options within the IBIT ETF? IBIT ETF only offers one share class. Therefore, the question of why multiple share classes doesn't currently apply to this specific ETF. However, it's helpful to understand why issuers sometimes offer multiple share classes in general, so let's explore that. Reasons for multiple share classes in ETFs. 1. Different expense ratios. Issuers might offer share classes with varying expense ratios to cater to different investor needs and preferences. These differences can reflect the complexity of managing the underlying assets or different distribution channels. 2. Distributing versus accumulating shares. Some ETFs offer both distributing and accumulating share classes. Distributing shares pay out dividends or capital gains regularly, while accumulating shares reinvest them automatically. This allows investors to choose based on their income needs and tax preferences. 3. Hedged versus unhedged shares. In some cases, ETFs may offer hedged and unhedged share classes. Hedged shares aim to mitigate exposure to certain currencies or markets, while unhedged shares offer full exposure to the underlying assets. This caters to investors with different risk management strategies. 4. Institutional versus retail shares. Occasionally, issuers create separate share classes for institutional and retail investors. These might differ in minimum investment amounts, fees, or voting rights. Why not applicable to IBIT? The reasons above wouldn't necessarily apply to the IBIT ETF for several reasons. 1. Simple underlying asset. IBIT holds a single asset, Bitcoin futures contracts. This simplifies management, making different expense ratios unnecessary. 2. No income generation. Bitcoin futures don't pay dividends, so distributing and accumulating share classes wouldn't be relevant. 3. Unhedged exposure. Due to its focus on Bitcoin futures, hedging for currencies or markets wouldn't be applicable. 4. Limited target audience. IBIT primarily targets institutional investors, so separate retail and institutional share classes wouldn't be needed. It's important to note that ETF structures can evolve, and future changes are possible. However, currently, the single share class structure of IBIT reflects its straightforward investment strategy and limited need for diversification within the ETF itself. Question 7. Why does the issuer believe the IBIT ETF provides sufficient diversification for professional investors? It's important to clarify that the issuer, BlackRock, doesn't necessarily claim that the IBIT ETF itself provides sufficient diversification for professional investors. While IBIT offers exposure to Bitcoin, which can potentially diversify a portfolio due to its low correlation with traditional assets, it shouldn't be considered a sole diversification strategy. Here's a breakdown of why IBIT can contribute to diversification, but shouldn't be the sole solution. Potential for diversification. Low correlation with traditional assets. Bitcoin has historically exhibited low correlation with stocks, bonds, and other asset classes. This means that adding IBIT to a portfolio could potentially help reduce overall volatility and improve risk-adjusted returns, especially during market downturns when traditional assets might fall. However, IBIT also comes with limitations for diversification. 1. Single asset exposure. IBIT focuses solely on Bitcoin futures contracts, limiting its diversification potential within the ETF itself. 2. High volatility. Despite potentially lower volatility than direct Bitcoin ownership, IBIT's price can still fluctuate significantly, which can negate its diversification benefit during periods of high Bitcoin volatility. 3. Limited historical data. As a relatively new product, IBIT's long-term performance characteristics are still unknown, making it difficult to fully assess its diversification potential over extended periods. Therefore, BlackRock likely emphasizes IBIT as a tool for adding Bitcoin exposure to an already diversified portfolio, not as a sole diversification strategy. Question 8. Why is the IBIT index considered superior to other similar thematic or sector-focused ETFs? It's important to clarify that the IBIT ETF doesn't track an index in the traditional sense. Instead, it aims to replicate the investment results of an index composed of Bitcoin futures contracts. This distinction is crucial when comparing IBIT to other thematic or sector-focused ETFs that typically track an underlying index of companies or assets within a specific theme or sector. Therefore, directly comparing IBIT to other thematic ETFs based on the superiority of their underlying indexes wouldn't be an accurate comparison. However, we can explore why investors might choose IBIT over other options for gaining exposure to Bitcoin. Potential advantages of IBIT. 1. Regulated and accessible. IBIT provides a regulated and accessible way to invest in Bitcoin compared to directly purchasing and storing the cryptocurrency, which can be complex and involve security risks. 2. Institutional grade. Designed specifically for institutional investors, IBIT offers familiarity and transparency through its ETF structure, catering to their requirements. 3. Potentially lower volatility. By tracking a basket of Bitcoin futures contracts, IBIT aims to offer potentially lower volatility than directly owning Bitcoin, which can be attractive to risk-averse investors. 4. Exposure to a growing market. The Bitcoin market is rapidly maturing and attracting increasing institutional interest. IBIT provides an easy way to participate in this potential growth story. 5. Transparency. The composition of the underlying Bitcoin futures contracts in IBIT's holdings is regularly disclosed, providing transparency to investors. However, it's also crucial to consider potential drawbacks. 1. Limited diversification. Unlike thematic ETFs that offer exposure to multiple companies or assets within a sector, IBIT concentrates solely on Bitcoin, limiting its diversification potential. 2. High volatility. Despite potentially lower than direct Bitcoin ownership, IBIT's price can still fluctuate significantly, requiring investors to be comfortable with this risk. 3. Regulatory uncertainty. The regulatory landscape surrounding Bitcoin is still evolving, and potential changes could impact the ETF's operations or value. 4. Limited historical data. As a relatively new product, IBIT's long-term performance characteristics are still unknown. So, is IBIT the ultimate solution for professional investors seeking Bitcoin exposure? The answer isn't black and white. IBIT offers benefits like accessibility, lower volatility, and institutional familiarity. However, remember its limitations: single asset concentration, inherent volatility, and regulatory uncertainty. Ultimately, the decision depends on your specific risk tolerance, portfolio strategy, and investment goals. Do your research, consider your options, and consult a financial advisor for personalized guidance. Happy investing! Remember, this is just a starting point, and you can adapt it further to your preferred style and audience. Feel free to add personal insights, visuals, and calls to action to make your video engaging and informative.